So welcome back to the Investing Markets and Money podcast. We're coming to you with a little bit more of a time-sensitive, news-driven podcast. This week, we're talking to Dan Blondal, who is CEO of Nano One, and many of our listeners will already be familiar with Nano One, the company. Some of you may not, but what we're going to be talking about today is some developments in China and the implications for the wider battery materials sector. We're seeing some very interesting news running over the last couple of days. First off, welcome back to the podcast, Dan.
Great to be here. Happy New Year, Stuart.
Happy New Year to you too. Can you tell us what the big news is out of China this week and why people in the battery material space are getting excited about it? But first off, let's lead off with what have the Chinese said specifically?
China usually on the 1st of January, 2nd of January, first week of every year, they bring out a new policy related to new industrial policy, adjustments to their industrial policy. We could see this coming for quite some time. It's no surprise they're putting it in place, but essentially the PRC is imposing a technology export limits on lithium-iron-phosphate. The precursors that go into that would be iron phosphate, lithium carbonate, iron precursors, etc., lithium spodumene to carbonate conversion technology. All of this, they're putting limits on that in order really to restrict the proliferation of that technology outside of China, really protecting their lead and their advantage in that space right now. They've got made some massive investments in that space. They do definitely have a substantial lead, and they're trying to avoid the proliferation of their know-how and technology in foreign markets.
You mentioned that they have a lead. I mean, how much of a lead do they really have over the rest of the world? I mean, how dominant is China in this space?
They're very dominant across the battery space, specific to lithium iron phosphate. They have 99% of the world's market in LFP. It's over 2/3 of their market share in China, so it is a massive sort of chemistry play and for the lithium-ion battery space, and it will become as dominant around the world. So they're really trying to protect their supply chains, their companies, their joint ventures with Western companies as well. This is all about sort of protecting those interests and really driving Western companies to buy their products rather than actually, extract the licensing, extract the know-how from China to build it out on a native soil.
And a lot of people probably don't fully appreciate just how important this kind of technology is. I mean, most people don't, in their day-to-day lives, I guess, realize that they're already using these batteries, but also that these batteries are becoming more and more important all the time. And it was interesting to see that they singled out this particular area of technology, which is an area that your company already operates on, as something where they are actually considering imposing some kind of restrictions.
Yeah, so maybe it's important to describe the supply chain a bit. Like, mining happens where mining happens. The rock comes out of the ground where it is, right? And then it gets concentrated, and eventually it will get refined and then purified using process technology. And that's one of the things that China has developed, in their area, and they dominate a lot of that space. And then ultimately those raw material inputs like lithium and iron and phosphorus come together to make a cathode material. And that's also a chemical process that then basically composites those materials into an active cathode material. And China has a tremendous amount of dominance in that space. What's interesting here is they're not restricting the cathode materials themselves. There are already tariffs and limitations on importing those into Europe and North America. What they're limiting is the underlying processes, what they call the processing technology to make those. And it'll likely be the equipment as well. And when we say technology, it's not just patents; it's actually know-how. A tremendous part of this is that they've taken technology that actually was first developed here in Canada by my team in Quebec in the early 2000s, and made it way bigger and way more productive, and improve the quality of materials all along the way. So it's that know-how. The know-how is really the key thing that they have, and enables them to run these very big plants at very high yields and very low costs. and they're trying to protect that know-how from undermining their advantages kind of worldwide. I think that's a really important thing to know here. This is not just about a piece of kit or a flow sheet. It's actually about the underlying know-how to use that kit and that flow sheet to run an effective business.
Which brings us on to the $64,000 question. You've already mentioned that you were involved at the earlier stage of this technology in the 2000s. What are the implications for Nano One specifically? Because obviously you're not based in China, are you?
No, we're not based in China. We had a partnership in China pre 2019 for a couple of years, but sort of got out of the space just because because of all the difficulties, and so we're completely kind of decoupled from that. Our technology, we have as a technology company patents and know-how and engineering plans and people. That's kind of our lifeblood. We have 48 patents now granted and issued around the world, some of them in China, many of them in Japan, Korea, Taiwan, India, Canada, the US, etc. And it's all homegrown technology. So that's the stuff that we own. No one else has any attachments to it. We're trying to license rights out to it to other companies, but I think that's really a key part of it. We're completely decoupled from China. It's homegrown technology that does not rely on Chinese technology, and that's a really important part here because we are unrestricted in the way we can now build our business and partner with other groups as well. But not only that know-how is not just the patents; it's actually the know-how in the people, and that's another important thing. We have the only team that's kind of made LFP outside of China, and the only plant. In North America and Europe that's made LFP in the past 10 years. So again, another really important part of what we bring to the table. And maybe very lastly here, our technology eliminates all the wastewater and sulfate waste that's typically associated with cathode making in China. And so that makes our technology much easier to permit. And permitting and allows us to be able to put it in many more jurisdictions and many more areas than you can much dirtier process. And of course, that reduces costs, it reduces permitting risk, it reduces financial decision risks, and ultimately enables a plant that can be deployed much more quickly. We partnered with Worley to co-develop that plant, put a wrapper around the technology, around our know-how, around our people, around the flow sheets, and license out LFP plants, to prospective industrials who are looking to build out cathode production in North America and Europe, in India, basically ex-China.
Your company's been attracting a lot of government funding, Canadian government funding, US government funding now. So it's obvious that it's been recognized that Nano One has an important role to play in the future of the whole sort of strategic battery materials space in North America. It strikes me that you could probably attract a lot more attention going forward now. Do you think that your technology is going to be sufficiently scalable to meet that kind of demand?
Yeah, so it's a good question, and scalability is important. There's a bunch of things that affect scalability. One is, does the kit scale? First of all, and can you make the plant bigger and bigger and bigger and still make an effective plant? So the plant we have in Quebec in Canada is already using full scale equipment. It's just a matter of making the lines kind of longer, deeper, wider, faster kind of thing. And that's what we're working with on Worley. So we believe we're fully de-risked at scale. But the other thing, it's the know-how. Know-how is really important. Knowing how to run that plant and how to get it up and running effectively. And again, we've got the team there, albeit small, but that team can be the funnel for knowledge, and that'll enable our licensees to be able to learn from that process, and also to be able to sample materials much more rapidly for offtake to build much larger plants. So again, very much part of our strategy. So by putting this kind of wrap around the plant, and because we don't have a waste stream, because we don't have wastewater and waste materials, that is, again, it's much easier plant to permit and kind of put anywhere we want. We don't need to be close to tidewater or rivers or lakes like they do in China, because we don't have to discharge. We don't have to dry pack waste materials. We don't have to try and sell it into saturated markets. All of that is gone, and takes a tremendous amount of the risk and the scale up issues out of the challenge. So we believe it's imminently more scalable than the Chinese process, actually, in North American and Western terms anyways.
That sounds really exciting, and it certainly seems to me that it's a space we've got to watch a lot more closely now that China is consulting about these restrictions in the way that it is. Thank you very much indeed for coming on the podcast at relatively short notice this week, Dan, and we'll wait to hear more about what's happening in the near future.
Yeah, well, thank you very much. And listen, if there's one little takeaway from this, it's that obviously China sees LFP as a really massive trade opportunity, and it's a strong signal to the world that LFP is coming. For those of us who are decoupled from China, I believe that it really helps pave the way.
You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news and sign up to our free newsletter there.